Hello, everyone. This is Andrew McNair from Swan Capital with our May 2021 Swan Report. In this month's video, we're going to discuss some recent headlines that influence the financial markets, but I also want to provide you some perspective on what these developments may mean for you over the next few months ahead. Now, as always, please stay tuned at the end of this video for some required disclosure statements. Now, at Swan Capital, our market outlook remains positive, but we're being cautious as we're starting to see inflation pick up. Now, we've seen stock prices power higher in May, and that's thanks to the enthusiasm surrounding the wide distribution of COVID-19 vaccines, as well as the restrictions that are starting to be lifted by state governments, as well as the CDC removing the mask mandate for those who are vaccinated. And we've seen the three indexes continue to improve for the year. The S&P 500 is up 9.5% year to date. The Dow 10.7% year to date, and the NASDAQ is up 3%. The equity market has been on an unprecedented run since last February's lows, and we here at Swan Capital expect more volatility and maybe even a correction in the next few months ahead. The S&P 500 valuations impact the pricing and potentially the stock market pullbacks and volatility that we may see in the future. Now, at Swan Capital, that's why we're very passionate about keeping our portfolios diversified with real estate exposure and international exposure. So the near-term risks that we see in equity markets are unexpected policy developments, potential tax increases, rising interest rates. And given these lofty evaluations, we want to see those evaluations have their earnings justify those valuations to really see the stock market step any higher. However, the possible rise in interest rates led to a huge sell-off that we saw in mid-May. Investors are afraid of inflation and a rising CPI, a consumer price index, and that's expected to only increase from here on out for the rest of the year. We're looking at income, corporate taxes, and capital gains taxes potentially rising, which really impacts investors' outlooks when they have to think about the tax impacts of selling their stock. Now, the pandemic did lead to an unexpected policy benefiting some of the large growth companies. For example, Google said that it would allow 1/5 of its staff to work from home indefinitely, and another 20% of its workers to work wherever they want. And that's the remaining 60% of the staff that will be actually working at the existing locations. And Google's not alone. Microsoft and Facebook and other companies are implementing these hybrid work policies. And that has huge ripple effects for municipalities with their tax base if people move abroad. It also impacts real estate prices whenever they do move. So these are huge monumental ripples when people implement these hybrid work policies. Now, not every company is on board. See, Wells Fargo, JP Morgan, and other companies are expecting most of their workforce to return to the office as soon as these restrictions are all lifted. Another thing we have to keep our eye on is cyber attacks. We saw a major pipeline on May 7th was hacked, causing a run on gas here in the South. And we saw gas stations having shortages across the Gulf Coast. Now, fortunately, that pipeline was back up and running by the week's end, but that pipeline paid a large ransom to those hackers, not before it caused a huge surge in gas prices. And that's something we need to keep our eyes on, because with solar and wind, huge infrastructure changes happening over the next decade that really rely on technology. We have to keep our eyes out for cyber attacks. Now, the U.S. Bureau of Labor Statistics says that's not the only thing that's increasing. The CPI, the Consumer Price Index, has increased 0.8% in April, and that's on a seasonally adjusted basis after rising 0.6% in March. So over the last 12 months, all items indexed increased 4.2%. This is the largest 12-month increase since the 4.9% increase of September 2008. Things are getting more expensive. And the index for all items less food and energy rose 0.9%. That's the largest monthly increase since April of 1982. And we're seeing triple digits in some categories like lumber. So we have to keep our eye on inflation. Now, this month, the famous ex-Fed official Janet Yellen clearly forgot some past lessons when she said that rates may have to rise somewhat to keep the economy from overheating. What's the problem with her saying that? Well, she's not currently the former Fed chair, but the current Secretary of the U.S. Treasury. So her words are weighted with significance. Predictably, when an official who can impact financial policy, such as the Fed chair and the Secretary of the U.S. Treasury speaks, it does impact markets. And we saw that the market was off nearly 400 points following her comments before recovering. Now, another item of note is that it can create problems for the markets if we have a prolonged debate over the deficit and U.S. debt limit, which has been suspended until July 31st. But these stimuluses are increasing our borrowing and increasing our federal deficit. So we need to make sure that we keep an eye on fiscal policy for the federal government. It seems that people are getting used to unemployment benefits as well as stimulus packages. And on the labor market side, that impacts the future labor market. We've already seen this with McDonald's and Starbucks changing their operating hours and offering sign-on bonuses to come work. It has been a real struggle because families have been sticking with stimulus as well as unemployment before going back to work. However, the jobs report did come back showing that the private sector employment increased by 742,000 jobs in April, which is fairly close to the expectations of 800,000 jobs, which is great news. But we need to keep our eye on these labor statistics. And here's why. If companies cannot have the proper workforce they need, they're going to have to change their operating hours, or they're going to have to raise prices, which only makes the inflation situation worse. So overall, the job market situation is proof that the economy was dormant and is waiting for the reopening. But if we continue to see more stimulus checks and more unemployment benefits being extended, it could cause issues. That's going to be it for this month's Swan Report for May 2021. I want to thank you for listening to our monthly market recap every month. If you have questions about your personal financial situation, give our office a call at 850-380-9558. Once again, this is Andrew McNair signing off for the month of May 2021. See you next month.